DSCR Vacation Rental, a case study for you. Hey, what's going on, everybody? It's Jeff Trevarthen, Jeff the Mortgage Pro. Hope you guys are doing really well today. Hey, I thought I'd do a vacation rental or a short-term rental DSCR case study video for you because I think this is something that people really want to know about. I get a lot of calls about DSCR loans in general, and then I also get a lot of information about just short-term rentals as well, and people really want to buy these. They tend to be really good cash flowing properties. So before I get into it, if you do me a huge favor, if you could click the like button down below if you enjoy these videos. And if you really like these videos, if you could hit the subscribe button down below, and that way you'll get notified when my videos come out, and then that way you can watch more DSCR videos that come out in the future. So thanks for doing that. I really appreciate it. It sure makes me feel good when people like the video content that I'm putting out. So thanks for doing that. All right, let's jump into the video today. We're looking at DSCR vacation rental case study here. And what I want to show you is this is a picture. I just took a property. This happens to be in San Diego, California. This one is near Mission Beach. It's actually just a couple blocks away from the beach, and it's a townhome. And the price on this property, you can see, is listed for $1.275 million. So you might think that's expensive, and it is definitely an expensive type of a property. I went on to rental or AirDNA to figure out kind of what the estimated yearly rental income would be on this type of a property. So that's a tip for you. That's a service that you can subscribe to. There's some free versions of it, and I just use the free version of it to give you this analysis here. But definitely a tool that you can use for determining what the market rent should be for a short-term rental. AirDNA.com. That's another thing that you can take a look at. Okay. So according to AirDNA.com, I just put in the address, and this particular property should generate $148,600 per year in short-term rental income. And I think that that's a factor. There's a factor in there of vacancy. So that might be every single day of every single night is rented out. There's, I believe, some vacancy factored into that. So that's a pretty accurate number for the most part for how much rental income this type of a property can generate. So $148,600 per year, which it seems like a lot, and it kind of is. Okay, so let's go through the numbers to see what those things actually look like in terms of, does a DSCR loan work on something like this? So the purchase price, you can see here, $1.275 million. With vacation rental properties, we typically need a 25% down payment. There's very few lenders that will only do 20% on short-term rentals. So you got to get to 25% down. And remember, you're going to have closing costs on top of that. And then you also have to have reserves left over when you're done. So remember, reserves, 1 month worth of principal, interest, tax, and insurance. That's 1 month of reserves. Usually about 6 months reserves is the minimum. And this can be in checking accounts, savings accounts. It could be in stocks or bonds. It could be in 401ks, IRAs. All those things are used as reserve accounts for DSCR loans. We might take a percentage of like 401ks and IRAs, but still, as long as you have that in there, then that's going to be money that you can use for reserves. So the base loan amount in this case ends up being $956,250. And we're just going to assume an interest rate in this example of 8.5%. So what I always tell people too, and people are, oh, that's high. Well, these are DSCR loans, remember, and they also allow you the flexibility of using the income that's coming in to help you qualify without having to qualify against your own income. So relatively speaking, yes, it is kind of a high interest rate, but it's not much higher than what the market would be for a conventional loan in buying this type of a property. So the flexibility that you get in qualifying with this leads to a little bit higher rate. But what I always tell people is if you can make it cash flow at an 8.5 or 9% interest rate right now, just imagine what happens when interest rates drop down the road and you're able to refinance into a lower interest rate. So hopefully you're going to be able to increase your cash flow over time, and then at the same time, hopefully you're going to be able to lower your monthly payment on that, and then that's going to increase the spread of cash flow for you. So that's a little thing about buying DSCR vacation rental properties and interest rates. Just keep that in mind, in the back of your mind. Monthly payment on this one for principal and interest ends up being $73.53 per month. And then if we add in taxes, monthly insurance, and then this one actually has a small HOA because it's a townhome, so $150 HOA. Our monthly principal, interest, taxes, and insurance monthly payment plus HOA ends up being $89.81 per month. Okay, so, and the last slide here is going to show us the differences and what actually happens when you get the DSCR loan on this. So 89.81 is our monthly payment. I actually put an extra dollar sign in there. Sorry about that. The rental income for AirDNA, according to what they said it would be here, would be $148,600 per year, which equates to $12,383 per month. Okay, and then this is how we're going to calculate it on the mortgage side. This may not be specific numbers. You might not generate exactly $12,383 per month. Some months might be greater, some months might be less, but we're going to take an average market rent for this type of a property. And so if you look at the DSCR, remember that's the monthly rental income divided by the PITI of the property. This is how we do our calculations. Obviously, there's other expenses as well that are associated with running a rental property, but this is how we do it for the mortgage calculation type stuff. So DSCR 12,383 divided by 89.81 gives us a DSCR of 1.37. So usually what we're looking for is a 1.0 or greater. On investment or on short-term rentals, we usually want 1.25 or greater for the DSCR. So this one is pumping out a 1.37 DSCR, which is pretty awesome. That means that this property is definitely going to cash flow for us according to our mortgage calculations again. And again, I want to just specify that this is just how we calculate the DSCR. There's going to be other rental maintenance type things that you're going to have to pay for going forward on a short-term rental. So you could factor that into your budget. You would want to make sure you factor in some vacancy into your budget. But in terms of getting a loan, this one would be a good candidate for getting a loan. So if you're a borrower and you have the down payment of 25% and you have cash to close and you have probably 6 to 12 months worth of reserves, then this could be a good investment for you where you're going to generate some pretty significant cash flow per month. So that's what $3,900 a month roughly, $3,300 a month in positive cash flow going forward every month. That's a pretty good deal. Okay, so hopefully this gives you an idea of what a short-term DSCR loan looks like, and hopefully this will give you an idea of how to calculate what the DSCR is going to be going into the transaction for you. And if you need some help doing this, I'm licensed in a whole bunch of different states, and my company is in 49 out of the 50 states. The only one we can't do anything is New York. So please reach out to me if you have any questions at all. I'd love to help you with your DSCR vacation rental property. Talk to you soon and have a great day.